Good evening, everyone. I'm back again. And it's actually also a continuation of the address I gave earlier because what I presented was on overview of the kind of new paradigms that are coming into the industry. And to carry those discussion forward, we have quite a eclectic group here. So we have people coming from banks, we have people from insurance, we have coming from fintech, asset management, we have risk officers, we have someone from analytics, someone from customer experience. And I think that is why I am quite excited about this panel, because this is the kind of diverse views which will help us. They can each talk about their own function, and giving you a sneak preview based on the discussions we had on the sidelines, you will realize how each of them are kind of related to each other. So nothing goes in isolation, everything, the whole world moves in sync. And what we were seeing are, as I had mentioned, certain new areas where the world is changing as far as BFSI industry is concerned. So what I'll do is I'll start first with a kind of a stock check, the current state of the BFSI industry. And now we are undergoing a transformative period. And in fact, Anand, the first question I would pose to you is also that we are undergoing a transformative period, and the technology is actually kind of revolutionizing everything. India today is home to about 26 fintech unicorns, and 49% of global real-time transactions actually happen in India. Those are big numbers. From your side, what do you feel are the key trends that are shaping the BFSI industry?
Yeah, thanks.
Welcome.
Yeah. I think absolutely. I think the momentum after the COVID, we've actually seen absolute transformation, largely driven by the consumer themselves. I think consumer behavior itself, the demanding behavior of consumer, which we have seen. So banking is now, a consumer typically started comparing a banking with any other e-com or a Zepto or a Zomato or Amazon experience. So the moment the set of consumers I'm talking about is not necessarily only a millennial or a Gen Z, even a senior citizen today wants things happen very similar to, if he opens a Flipkart website or an Amazon and he wants to see a same experience in even mobile banking. And when we say banking, actually one more thing, always when we say digital, one thing that comes to our mind is only ease of loans, but actually as a customer, when you look at it, it's not only digital payments, he also looks at depositing money, say opening an account, everything that he does on a banking side, everything he wants now as an Amazon menu. With a finger he wants to just roll out and just click and get it done, right? So that's the level of expectation. Therefore, banks have started delivering. Every bank is now kind of in a treadmill to deliver that type of experience.
Well, that's very interesting analogy actually, and perhaps Suraj, you could actually throw more light on it, considering you are the head of customer experience at Kish. Tough job, it seems.
Yeah, I think it's a tough job, given that banks are giving a great competition now to fintechs, I must say. And that's a positive for the economy as well, because technology adoption as banks has increased very much post-COVID. What I see here is the important thing here is to understand the need of the customer. So how fintech started was there was unmet need of the customer which was not fulfilled by banks. There were some segments of the consumers, like for example self-employed, who were not like small self-employed businesses like shopkeepers, general store or kirana store, etc. They did not have easy access to credit. The reason was they did not have records which can help them get access to credit, like income proofs, etc. And also the credit history was missing. This is where fintechs played a key role in providing, first of all, working capital finance. It started with a working capital loan for 10 to 15 days, like a small loan of 5,000 or 10,000. It started with that, and this helped them slowly build credit history. So they moved from zero credit history to having a healthy credit history with fintechs, and from there they started getting access to credit from banks and also getting access to credit cards. So I think identifying the unmet need of the customers is very important. That's where fintech started from, and that's where banks have also taken it up very well. Similarly, the Jan Dhan accounts that you spoke about, they also, the reason Jan Dhan has taken up very well is it is looking at the unmet need of customer wherein direct benefit transfer to the accounts of customer, which helps them skip all the long queues that they otherwise have to stand in post offices or government offices to get their benefits delivered. So I think a lot has to be done with respect to farmers or other self-help groups, etc., wherein a lot of digitization is yet to happen. And the area where a lot of impact can be done is places where customers do not have credit reports, credit records, credit history in place, and also customers who do not have an income proof in place. For example, the one thing that fintechs were able to do was like PhonePe, Paytm, and GPay, etc. They had payment gateways provided to the small stores. So basically, people were able to accept payments using a QR code. And now these shops can tap the credit market just based on the payment history that they have, because they don't need to show their income separately. They can simply show the payment history of last 6 months. And based on that, banks can calculate and approximate income of the customer. They can triangulate the risk, and they can at least give some credit to the business based on just the payment history. So I think alternate data is playing a great role here.
Certainly, and alternate data, yes, you mentioned it has quickened up the process and it has opened more doors as well. You're talking on behalf of a fintech, and Anand is part of IDFC First Bank, which is still a youngish bank. I would also like to ask Priyam, who comes from Saraswat Bank. Now, you have a legacy relying primarily on the offline model. And do you see that key trend also happening?
Yeah, so even the legacy banks like ours are now indulging into digital transformation. We have in fact embarked on a project along with Ernst & Young to digitally transform the bank, and that's the need of the hour, because the landscape has changed, as has been mentioned by the various panelists, that in today's world people want loans faster. The access to loans has become pretty good. The access to the customer journeys have become wonderful with the advent of fintechs, and now the next disruption is going to happen with AI. So with all that in mind, it's important that, we talked about alternate scoring models. So there are too many scoring models in the market where on the basis of social media usage and mobile data usage, you can arrive at the customer score. The traditional ways of banking obviously didn't result in the kind of financial inclusion we wanted in the country. And now this alternate means have ensured that, people get access to data. Kisans, the farmers get access to data. Rural women get access to finance. So all these, factors are in play. The recent report shows that while the funding in fintechs have gone down in the last 2 years in India as compared to 21-22 when it was booming, more than 50% of the investment is happening on the AI part. So next big thing would be the big data play along with AI ML. Now AI solves a lot of problems, be it on the risk management side, wealth management, fraud detection. It can be a tool which can do a lot of things. ML on the other hand can manage back-to-back processes for the bank. Big data can give you consumer insights that no other data can give. It's a complex set of data that gives insights of the customer, and you can go for hyper personalization of what to offer to the client. RPA, robotic process automation, again helps in beautiful KYC and onboarding journey. So and then you have the AR and VR also coming into play. So with all that in place, I think it's a wonderful time to be in India, and the time is going on since 2016, I would say, and I think next 10 years would be very interesting.
So yes, definitely you mentioned AI, ML and all data. All that is happening, helping in growth. All that is happening in customer experience. But those are the more visible aspects of BFSI. But there is also the backroom drama, which is risk, a more critical one. I'm giving it a serious look by drama, but the idea is that risk management is a very serious business, and that is something which all financial services company want to look at. Ashish, in your view, if you can, on the risk management side, what do you think are the key trends right now? How does it hold?
Yeah, so as all the panelists, most of the panelists have covered that we are into a transformation phase into the banking BFSI industry. And as Vipul was just rightly mentioning about the risk management part. So I think for all the banking, financial services and insurance, I can just share my experience being from the insurance industry. So in the whole customer life cycle, at every stage, I think risk management, we are linking it now through the automated platform. So so in insurance business, all the tech companies, now we have renamed it to the InsurTechs. So from the customer onboarding stage, as just Priyam has just touched upon, so we can't onboard every customer. So you have to, being from the regulatory point of view, you have to screen the customer. You have to have the process to know your customers. So we call it KYC. So from the start, the moment the customer is trying to buy a policy, at the initiation stage also, we need to know about all the details about the customer. Then we have to screen through the international sanction, because we have most of the insurance companies have JVs, wherein foreign insurance companies are actually one of the partner. So as far as we are concerned, we have a European insurer, Generali, which is the Italian 190-year-old legacy, and it's a Fortune 500 company. So they are also, as Vipul was mentioning when he was making the presentation about GDPR, so they have to comply the GDPR regulation, etc. So the regulations are very, very stringent on BFSI stage. So now the time has, that we are in the time and we are in the stage wherein the customer also wants a real-time processing of the insurance policy. I remember when my dad used to take a policy, it used to take 7 days to receive the policy. But now the expectation from the customer is a real time. So most of the insurance companies are now actually advertising that within us maybe 60 minutes or maybe 30 minutes they are issuing a policy. How will they issue the policy? So for issuing the policy, when you are actually taking the customer into your system, everything should be linked. So our AML screening is linked through the API with the core system. And then once the claim also, so the other stage of the customer is when you actually file for a claim. So suppose I'm driving a car on the road and my car has met with an accident. You have to lodge the claim. So now the customer is also having a very, very maybe less appetite to wait. So they want immediately. So now our claim systems are also using all the automated AI and ML functions wherein everything is through an app. So if I'm driving a car and met with an accident, I'll click a photo, upload on the app, it will go to my core system, we will scrub the fraud angle, etc. and then the claim will be registered, and if everything is clear, we call it straight through process, wherein no intervention is required in terms of physical verification. Automatically it will go to the next stage and the claim amount will be credited to the customer's account.
So it's interesting seeing all views is that the customer behavior demands innovation. The government and societal responsibilities warrant that we look at inclusion. But at the same time, financial prudence requires risk. It's all there. So Anirban, what do you think are the risk management frameworks one should adopt? Sometimes it's a case of you can have two but not the third. Can you have only innovation and inclusion but not look at risk? That's dangerous as well.
First, good evening, Vipul, and thank you so much for allowing me this kind of a wildcard entry, so to say. I'm delighted and also humbled at the same time, to be among such eminent panelists here. We are a very late entrant in the lending space, okay, and therefore for us, it is almost given that both innovation and customer experience, okay, has to play like a very well-balanced cricket team. within, the 22 years of risk policies and the boundaries of compliance and regulation. Okay, that's how it is. And, it is also given that with the advent of technologies almost every second, okay, regulations will also keep on emerging and evolving, right? The problem that we have, okay, when we started and still date, okay, is that whether our systems and the processes were, actually designed to adopt to those changes, one. Second, of course, is, whether those regulations which are coming in, okay, are really well understood in terms of the letter and the spirit of those guidelines, and how much of it is then left to, interpretations. And, for us, it is also necessary that we partner with multiple players in the system, because, we will not be able to afford a lot of investment in physical infra, for example, okay, and therefore, companies which cannot see eye to eye in terms of our compliance standards, okay, we then have to, sort of part way over a coffee. So that's the challenge also, yeah.
Part ways over a cup of coffee. Very nicely and politely put, but I think what he mentioned is that there has to be a definite action to be taken. And India, in the financial inclusion side, we have made rapid strides. In fact, there's a financial inclusion index which the RBI releases, and I'll give you a bit on how it has changed. From 2019, it was 49.9, almost 50 was the index. Okay. In 2024, it has come to 64.2. In index terms, that's a huge jump actually. And but the challenges persist because over 190 million adults remain unbanked. There's a huge, it's an iceberg. There's a lot more to be tapped. And only 27% MSMEs have formal credit access. And MSMEs are, of course, the backbone of our economy. Anand, starting with you, because on analytics side, and you must have observed the data very closely, what are the challenges or the roadblocks, or maybe the kind of deficiencies or gaps do you foresee when it comes to accelerating financial inclusion?
No, so actually the other way around. I would rather say these roadblocks, to large extent, the growth rate has now increased very, very significantly. The trend I am seeing, at least in the banking side and lending side, the rural growth rate are far, far higher than the top tier cities. The growth rate of lending, both in deposits, investments, SIPs, SIPs, everywhere, the rural growth rate and the consumption rate, digital payment rate, there are type of adoptions on the rural side, tier 3, tier 4. We're doing very, very well, especially number of branches are going more, the reach is going more, the number of users have increased. So I think the growth rate in rural is high. Have we touched to that extent? No, not yet. It's a long way ahead. But I think the type of income, investments, things which they were not able to probably give in the last 10, 15 years. The documentation issues that they had, or I think the difficulty part, few years back, maybe 10 years back, they had a lot of difficulties in having a lot of documentation. With government, I think like opening up everything into digital. Like I'm saying, like the property sites are now digital. What they own, the Vahans is digitally available. The GST is available. A lot of these things, what you do is available. So now it's, with the Jan Dhan account being available, everything is digitally available. They are able to give those proofs, and there the market is opened up so much. So the lot of these big merchants, banks, finance, everybody is trying to now take the next set of business maybe coming from that area. I would say that way. Yeah, because the tier 1 is now so much blocked with, it's only competition. It's like taking away business from somebody else and giving it here. Whereas in those markets, it's like opening up that market itself, and you are right now trying to penetrate as a first mover.
Sure. Insurance side as well?
Yeah, I would like to just add, since you touched upon the financial inclusion. From the insurance side, similar to the financial inclusion, the insurance regulator has come to a conclusion wherein there is a regulatory prescription on insurance inclusion. What they have done to match the Prime Minister Modi's vision for insurance for all by 2047. So as you all may have observed, we have a life insurance companies, we have a general insurance companies, and we have a standalone health insurance companies. So they have actually allocated states. Every insurance company will have to adopt one state wherein you have to cover 100% in terms of the lives, in terms of the property, to match the vision of insurance to all by 2047. And how will you do that? So they have changed the whole regulatory landscape. So our regulator, because the regulator was going towards the path of insurance to all by 2047, the whole of the regulations, which were actually at one point in time used to be a roadblock, they were ready. They were ready to actually rationalize it. They were ready to actually relook at the regulations. So the regulator has created a committee called as Regulation Review Committee. So the mandate to this committee was to actually study all the regulations applicable to all the insurance companies, whether it is a life, general or a standalone health insurance company, and suggest changes from a rule base to a principle base, so that the insurance can be actually made available to the last mile. So lot of changes have been done, and happy to share that I was part of the Regulation Review Committee, and we have submitted 3 reports. And if some of you may be monitoring the insurance landscape of India, you must have observed that lot of regulatory changes have come, and lot of rationalization, lot of liberty has been given to the insurance companies to make it digital. Now they have come to they have created a marketplace also. Just like Amazon and Flipkart, they are working on a platform called Bima Sugam, where everybody will have to register. All the insurance companies will be there, agents will be there, and it would be highly competitive in terms of buying insurance to the customer, so that the vision of insurance to all by 2047 can be completed.
In fact, these are quite progressive steps as you have laid down. I think our regulators are quite evolved. You want to add?
I just wanted to add one last point that, see, the moment you say financial inclusion, 4-5 years back, banking people used to think, it was in bank side, they used to call it PSL,
Yes,
private sector lending, and it was being done because it is RBI has told you. Today, financial inclusion people are doing because they learn money out of it. So that itself is like a dramatic
How the
shift.
tables have turned, certainly. And I was also, it was a regulation, and it's a classic case of how regulation has provided an opportunity. And as I was mentioning that our regulators have been quite progressive, right from RBI has been tightening compliance laws, and SEBI is focusing on market transparency, data protection laws have become stringent, but that also means better guidelines. So there's no room for any ambiguity. And Anirban, do you foresee these, and this also comes from a lot of global reforms that have come in. Do you see any more such reforms or regulations impacting Indian BFSI industry?
We are in general a very small entity, right? And, a large part of our talent force is deployed in the information technology, of which again, we have a fair share in information security management, right? But, despite all our best efforts and intentions, okay, we could thwart off some attacks on us, but, we find that, brilliant minds still could use us as a medium to sort of defraud others, right? So therefore, there is a lot of investment which is actually already going in terms of, building, say, zero trust architecture across all our accesses devices. We are, doing a lot of cyber security audits and, awareness sessions. But the problem here is that, it still beats us that how, today's age of information, how people still fall prey to so much of lure of easy money, crypto and whatnot, which we find it very esoteric to understand, right? While we do everything, global regulations will come in also and will be adopted here. But at the end of the day, we also have to keep on hoping and praying that, we are not outsmarted each day. Yeah.
Sure. And Ashish, anything on the insurance side, on the frauds? Yeah.
So when you go digital, there are a lot of, as Anirban was actually mentioning, that you are prone to the fraud. So in our sector also, we have a regulatory prescription. So we have a defined code for fraud control framework. So you have to have automated tool, you have to select maybe your customers at the claim stage also. So as far as my company is concerned, every insurance company has their own set of fraud control framework. So we use a lot of AI and ML tools for actually getting the intelligence. So in terms of, because we are a pan-India presence, we write around 3 lakh policies a month, which is close to 45 lakh policies in a year. So through the fraud analytics tool, our intelligence, we have gained so much intelligence that we know which area, which geography, which type of a customer, what type of a vehicle is fraud prone. So we use this intelligence, we gain the intelligence as a fraud control framework, and we pass this on to our underwriter to actually underwrite this tightly and to use this intelligence to make a good underwriting decision so that the company can manage the fraud maybe wisely.
In fact, RBI has also tried using AI and ML for a mule, hunting out the mule accounts, hunter.ai, etc., and which are being used for detecting financial fraud. They take data from various, they identify the fraud patterns, apparently more effectively. Has any of you had an experience with that?
Not really with the mule part, but so as an insurance industry, we have a council. So we have for a life, all the life insurance companies having represented by a life insurance council, and GI and standalone health insurance companies are being represented by GI council. At a council level, they were exploring one maybe software either from, if I'm not wrong, Experian or someone to use data analytics at an industry level. So for example, I'm processing, let's say 10,000 claim in a month, and out of the 10,000 claim, we experience around whatever 5-10% of the fraud. So a type of a fraud will be passed on to this tool, and they will scrub the data across industry level so that we have an intelligence what type of customer, what type of geography, what type of a vehicle is more fraud prone.
Okay.
But not especially the mule which you
more
have
like a propensity. Anand, something on that?
Possibly, yes.
Okay. Anand?
Yeah, I mean, absolutely yes. We've come across so many mules detection. So I think bank also learns, right? Because the moment, I can give some examples in the recent past, digitally you can open accounts, post-COVID, digital savings account can be opened fully on one click, because digital lending in some form existed for many years now. So the lot of mule detection and fraud detection on lending side has been absolutely tightened, with bureau being there and lot of other framework being there. Savings account side and SIP and mutual fund side, the digital full transformation happened in the last 2-3 years. So the fraudsters were like very, very keen on those areas, absolutely. So one of the, I think the latest use case, I can give one simple use case, maybe people may know, may not know, but in one of the use case, it is like, it goes this way that, there are some educational counselors who help students go abroad. Now, typically they want to show in students' account some money is there, that's what, then only they get the visa and they get the education. So this educational counselor used to put money in, they open an account of a student, he only puts the money there. And he gets the kid to go to abroad, and after that person goes, he again takes the money back and again puts in another kid. So, right? And the same money is rotating with like 100
innovations
kids,
of different kinds.
Right? It's a simple example, but it's a simple thing, right? And it's actually same money rotating. Whereas 100 kids have gone to abroad, right? It's an example, right? Like this, it's just very small example, but mule it's going at a very, very large level, and therefore it's so important when digital anything. I think he touched upon in the beginning, when you do digitally something, whatever was the checks and controls and audit trail which existed before you did the digital transformation in the manual journey, I think you just have to think every single step, replicate it here so that the digital part looks seamless, but backend checks are so clearly maintained and the trail is maintained.
so that these all things are prevented.
Definitely. And we are speaking about offline versus digital lending there. And in August 2024, RBI introduced the unified lending interface. Now that is a digital platform for, it's a digital public infrastructure in that sense. And it eases the whole process of lending, especially to farmers and the MSMEs through digitized records. Now, the statistics says that because it's based on alternate data, etc., the platform has disbursed over 6 lakh loans amounting to 27,000 crores as of December 2024. That's a huge amount. And Priyam, so have you had experience with ULI and what role do you think it will play in the coming future?
So ULI is something which is still getting rolled out. It's still not got rolled out completely, but I think that would be a game changer in India, because if you look at the fintech space today, most of the fintechs are operating in the unsecured space, be it personal loans or be it supply chain finance. These essentially cater to the unsecured space, and obviously we have a huge book now in the unsecured space with which RBI seems to be uncomfortable, and there have been several narratives around that, by the governor. But with this, what will happen is, one, there will be standardization. Two, there will be cost optimization, because there are too many banks today who do not afford the kind of money, which is required to change, especially if it is a legacy bank. The money required to change through for a digital transformation is immense. So not everybody, so there are too many small finance banks, there are around 1,500 cooperative banks in the country. Not everybody can transform themselves with that kind of money. But with ULI, RBI would be coming up with a cost-effective solution where everything would be in one place. So from KYC, onboarding, to banking analyzer, to GST records, and most importantly, the land records. So currently, land records are not digitized because each state has got a different way of maintaining land records. And therefore, this leg in secured lending becomes offline leg, where you have to get the valuation of the property done, a visit is done, legal of the property is done, and then the mortgage happens. So mortgage currently is not digitized. If RBI does what it's saying, and it will do because it's at the end of the day, it's a regulator, when all the states will start sharing their records, land records, it will ensure that digital secured lending can also happen. And banks, small banks can go to RBI and say, I want to use your ULI end to end. I want to use all your tools. Now, one thing remains to be seen is whether, fintechs, already existing fintechs in various, solving few, enabled tech problems like banking analyzer or GST or otherwise would be used by RBI to plug and play, or they will have their own system or they will ask them to use it with a commission. That piece, that leg is still left to be seen. If they decide to onboard end to end, it might be a problem for already existing fintechs.
So there are still missing pieces in the jigsaw.
Yeah,
that's it. And quite insightful, and I see that digital public infrastructure is really helping the sector grow. But what we are missing for quite some time is actually in Bollywood movies we have this love triangle, and the dashing hero is still the innovation, because that's a glamour guy, and that customer experience part, and we have the dashing Suraj also. So Suraj, of course, inclusion is there, risk is there. From a customer experience side, how do you think it is evolving? Especially when, again, I'm coming back to tech, AI, ML, changing the whole experience of the clients.
Vipul, we can say right now with AI, a lot of banks and NBFCs and fintechs are experimenting. They have not fully utilized AI when it comes to customer experience or customer service or daily operations, but a lot of pilots are being done. There are two reasons for this. First of all, organizations want to see the kind of the data security when it comes to AI platforms, because a lot of AI platforms that are available are startups that are offering these services. Of course, there are also multinationals that are offering, but a lot of innovative and interesting services are being given by startups. So the kind of data security, the kind of data that is being used, or how much data will be exposed to the startup giving these services is very important. So banks and fintechs, since they are in a very tightly regulated market, they are experimenting with these players to see what kind of things can go wrong. Second is the cost part. Presently, Gen AI is a bit expensive. If you want to do it on a scale, especially if you are a fintech or if you are a payments platform, like if you are say a payment platform like PhonePe, GP or Paytm, you have a huge scale. If you implement Gen AI based customer experience platforms for these customers, the profit or revenue that you get from this customer is very minuscule because you are operating on scale. So using Gen AI wouldn't be advisable right now. But I think 3 years down the line, the cost is expected to come down with more competition and more platforms coming to the market. So right now, I would say everything is being done on a pilot basis. People are testing the waters, and 2 years down the line, I think it would be used in a very large scale for customer services. Right now, if I tell you what we are doing is Gen AI is being used on the quality front, wherein we are feeding the system. We are using at least 3 different players on a pilot basis we are feeding the system all the interactions that happen on customer service, on sales, on collections, all interactions that happen with customers, voice interactions, chat interactions and email interactions are being fed to the system so that the system can tell us what kind of interactions are happening day in, day out, what is the sentiment across different interactions, what kind of feedback customers are giving. So at the end of the day, we get a dashboard which tells us, okay, we had out of 100 interactions, 30 interactions where we had customers that were irate. There were 20 interactions where customers gave us a feedback for a new product or service that they are looking for. For example, we are giving personal loans. There are customers out of 100, we are getting 2 customers who are asking for a loan against gold or a loan against property. This is a good feedback that we get. And second, we also get to understand what areas we are going wrong. For example, training is a big area that Gen AI can help us, because when you analyze interactions, a huge volume of interactions like 1,000 calls per day through a Gen AI platform, it tells you what went wrong during the call. What are the areas where the caller or the employee needs training on? So training has become a daily activity as compared to a monthly or quarterly activity. We now know that, okay, out of 1,000 calls, there are 30 calls where the professionalism was not up to the mark or the product knowledge was not up to the mark. So immediately the feed goes to the trainer and he can inculcate that into his training sessions. So that's where we are using it on the quality and training part. When it comes to platforms like VoiceBot, we prefer smart IVRs compared to VoiceBot, because we have seen that customers are not very much inclined to use VoiceBots. Whenever they see a robotic voice being played to them, they are not very interested. They prefer a human agent. So I think smart IVRs are much better than VoiceBots as of now. Even if it's a very human-like voice, customers don't prefer to interact with the VoiceBot right now, especially when it's an emergency service like, say, insurance claim, or if it's an emergency service wherein payment has failed and amount is debited, he wouldn't prefer to interact with a VoiceBot. He would prefer a human agent or a smart IVR, which can immediately tell him what to click and get the right answer.
So, of course, in this also the preference is towards humans, and I think it's not just in customer experience, but like our colleagues mentioned that it's also about when it comes to any kind of risk analysis, etc. That kind of human element is required to bring that experience and learnings from the previous frauds which happen or the previous the positive reinforcements that need to be done. In the interest of time, I'll have to conclude the discussion, but one quick thing on I'll summarize it for the benefit of the audience. We discussed a lot about innovation, inclusion and the risk part of it, and all 3 are important. All 3 should go hand in hand together. Anand mentioned about, started with a very apt analogy of the expectation of customers moving towards a Flipkartization or Zeptoization of financial services. True. And the risk models, the customer experiences have evolved by virtue of artificial intelligence, by virtue of the all data which is available. One of the key things has been the digital public infrastructure, the tech stack which the government itself is building, which will help all kinds of banking institutions. And financial inclusion, while the regulation started it as something to be done as a societal goal, my colleagues here have been stating that it has turned into actually a revenue generating opportunity. So the lens has changed by which we look at financial inclusion. And customer experience, though there are still much needed. These are early days to use Gen AI, etc. It's expensive as well. But if there has to be one thing, I think, correct me if I'm wrong, anybody has a different view, is that if each one of us would go back to the boardroom and tell them what to look at, it would surely be artificial intelligence. Do not ignore it, but bring in the human intelligence as well. So thank you all gentlemen for sharing your insights. Thank you audience for your hearing. Truly fascinating and insightful. Thank you.